Hey guys, Nicole here with Momentum Accounting. In this video, I am going to be hopefully demystifying your understanding of how to pay yourself as an S-Corp owner and what it means from a payroll tax perspective. So let me just move myself out of the way here and I will jump in. So in this example, this is a business, Kramerica Enterprises. So let's just pretend that this is your business and you are Cosmo Kramer, our favorite guy from Seinfeld. So last year, 2022, let's assume you did $1 million in revenue. You had $700,000 in expenses. That includes all of your operating costs, your employees, their payroll taxes, their benefits, your rent, all that good stuff. Then you paid yourself $100,000 in wages, so through your payroll software. And on that $100,000, the company also paid $8,000 in payroll taxes for you as the owner. If you want a better understanding of how payroll taxes work, I recommend going to this link here. I can link it in the video, but you can see, so let's say you want to hire an employee. I put in $100,000 here in California. I put 3% for the SUI rate in California. Even if let's just say it's 0, if you don't know your state, calculate that. You can see, so regardless of what state, if you hired an employee for $100,000, you'd be paying at least $7,800 in payroll taxes to federal, and then your state is usually a little bit on top of that. So I always just round up to 8% on average for payroll taxes. Okay, so if we're coming back to the example here, the payroll taxes that you paid for your employees, you also probably paid around 8% for their payroll taxes. I'm just breaking out the officer comp separately. Okay, so after all that, net income, $192,000, cool. And in this example, I'm just going to assume that you also distributed that $192,000 to yourself. Okay, so that's a whole other topic we can talk about in another video. But let's assume that all of that $192,000 you moved from your business account to your personal account. So that was cash to you. Okay, so that's from the operations for the year. You made $192,000. Cool. Now, on top of that $192,000, you also throughout the year in the form of W-2 wages, every 2 weeks probably got paid. So you've got a W-2 for $100,000 for the year. But on that $100,000, you as the employer also have to pay payroll taxes. So you also pay around 8%. It's a little bit different, but for purposes of the example, let's assume it's also 8%. So Kramerica Enterprises pays 8% on the $100,000. You as the employer pay 8%, employee pay 8% on that $100,000. And in this example, I am totally ignoring income taxes. I'm ignoring health insurance. I'm ignoring 401k. I just want to focus on payroll taxes and implications here. So your net wages, so net cash through your every 2 week payments that you get through your W-2 wages is $92,000. So your total cash to owner for the year from the income generated through the business, net income generated from the business, plus your wages was $284,000. Now, let's now assume same company, same situation, but in this example, you don't pay yourself wages. You just take everything out as a distribution. So $1 million as revenue, $700,000 as expenses, no wages. So your net income instead of $192,000 is now $300,000. So you distribute all $300,000 of that net income to yourself. But that means you don't get any W-2 wages. So your total cash to owner for the year is $300,000. What's the difference? The difference is $16,000. That's your employee payroll taxes plus your employer payroll taxes. Okay, so let me just highlight that for you. 8,000 plus the 8,000. So this is why a lot of people will say, well, if I can just take everything as a distribution and pay $16,000 less, why would I ever pay myself a salary? Because the IRS says, we want our payroll taxes. So basically the IRS requires that you pay some sort of reasonable compensation. And when they're processing your S-Corp they're processing your S-Corp tax return, they're checking to make sure there's a dollar amount on that line and it's reasonable in proportion to your, I'm not sure, net income. So it's something that you'd want to discuss with your tax accountant to make sure that they are in agreement with whatever number you decide on. And typically it's, what would it cost to replace you as the CEO? And so that can sometimes be arbitrary. But anyway, this is just about payroll taxes. Income taxes are a whole nother thing. I can do a whole nother video on that. I am the owner of Momentum Accounting. We do not do taxes, but we help S-Corp owners, typically 7-figure S-Corp owners, professional service firms, and marketing agencies with bookkeeping, payroll, up to understanding profitability and what levers they can pull in their business to be more profitable. But this is really, really common question we get. And so as part of working us, we want to make sure that you're paying yourself a reasonable salary. We recommend Gusto for that, and that you understand what the actual cash to owner means at the end of the day. So if you have any more questions on this or want to reach out about our services, feel free to go to momentumaccounting.com. Hopefully this was helpful, and I'll see you at the next video.